Good morning to those of you in North America, good afternoon, and good evening to those of you around the world. Welcome to the 8th Annual Financial Inclusion Week. My name is Mayada El-Zagbi, and I'm the Managing Director of the Center for Financial Inclusion, your host this week. This year's theme is Inclusive Growth in a Digital Era. We can't hide the fact that we're living in a very volatile period with a looming food crisis expected to follow this period of inflation, war, unprecedented heat waves during the summer, and a myriad of natural disasters around the world. We know that digital payments were a superpower during the pandemic, helping to channel much needed support to the most vulnerable and helping some businesses go online when lockdowns made in-person work impossible. We believe that we need to supercharge our work to deal with the multiple crises that we're all living through, and we hope that Financial Inclusion Week will inspire you to do even more than what most of you already do. We're so excited to kick off the largest Financial Inclusion Week yet. While we're waiting for people to join us, please put in the chat where you're from, the city and the country. Every year, Financial Inclusion Week gets bigger and content is more impressive. Last year, we welcomed more than 3,000 registered participants from 138 countries who watched 77 live and on-demand sessions. This year, we have 121 live and on-demand sessions, and we expect even more people to join. Already, we have 2,500 people registered, and we know that more will register throughout the week. So welcome those of you from different parts of the world. The global nature of this event is one of the things that make it unique, and the increasing interest we've experienced over the past few years shows how much this community values coming together and learning from each other. Throughout the week, we have sessions covering digital financial services, impact investing, micro and small enterprises, consumer protection, crypto and digital assets, women's financial inclusion, government-to-person payments, fintechs, and so much more. To get things started, we're going to be hearing from some colleagues and partners around the world to let us know what's on their minds and what's happening in their countries and regions to help us set the tone for the week. But before I pass the baton to our global and regional inclusive finance news reporters, let me ask you all to tell me what's on your mind before we head into the week. My colleague will be putting in the chat a link. Please go to that link and enter what's on your mind. One or two words of the key things that you're thinking about. We'll come back to the results in a bit. Now I'd like to hand over the microphone to Evelyn Stark, who is Vice President of Knowledge and Programs at CFI. Over to you, Evelyn.
Good morning, and thank you very much. Excited for this Financial Inclusion Week to start. We're going to kick off with a bit of a regional roundup right now, checking in with colleagues who will report from around the world what they're seeing in their countries and regions and the impact particularly on financial inclusion. At the global level, we are seeing headwinds to progress, as all of us know. After decades of decreased global poverty, the pandemic period has seen increased poverty, exacerbated by political conflicts, economic instability, which has led to more people being displaced than at any time since 1945. Of course, the climate crisis is a major contributor to instability, causing hotter climates, threatening farmer livelihoods, and the ability to meet the world's food needs, but it's also threatening jobs and small businesses, even in cities. Supply chain disruptions and inflation are likewise impacting economies around the world, from small businesses to larger global corporations. In amongst the bad news, however, there have been positive movements reflecting the innovation and resilience in our sector and amongst the men and women we serve. 76% of adults worldwide have an account that allows them to send, receive, and save money. The gender gap is shrinking too on a global basis to a 4 percentage point gap. And although we'll hear from our regional reporters that there are large variations in this figure, there's an increased focus by regulators and financial service providers to also serve women clients. This rise in account ownership, and particularly in the ownership of mobile money, has enabled rapid response to pandemic, economic, and climate shocks, with government and humanitarian payments exploding over the past 3 years. These payments, one-off payments, repeat payments, large or small, have enabled millions of families to keep food on the table and often to keep their small businesses afloat as well. Though still nascent, this has the potential to act as an on-ramp to the increasingly digital financial solutions being offered by entrepreneurs around the globe. You will, of course, hear much more about these issues and solutions throughout the course of this very busy Financial Inclusion Week. But we're going to start by taking a tour of the world by our colleagues who are going to provide insights and highlights for each region. Of course, we've tasked them with an impossible task to cover large regions, but let me start with Meher Shah, who will be covering South Asia for us. Meher is the Director of Knowledge Management and Communications at Karandaz in Pakistan. Meher, over to you.
Good evening from Islamabad, Pakistan. It is such a pleasure to be reporting on South Asia for the Financial Inclusion Week. In the last decade, financial inclusion in South Asia has more than doubled, from 32 to 68% of adults having a bank or mobile money account. Similarly, the overall gender gap has narrowed, with mobile money being the biggest enabler for women to access financial services. This is no small achievement in a region of nearly 2 billion people. But it is equally important to caveat this progress, as it is neither sufficient and nor is it evenly distributed. So half of the world's unbanked population lives in 7 countries, according to the Findex. 3 of these are in South Asia. And while India and Sri Lanka have closed the gender gap in terms of account ownership, in Pakistan, only 15% of adult women are financially included. It is also worth pointing out that South Asia's financial service providers are operating in a very challenging environment. Over the last 2 years, a brutal wave of COVID ripped through India, causing more than 500,000 deaths. COVID-related lockdowns caused the tourism industries of Nepal, the Maldives, and Sri Lanka to come to a grinding halt. In Sri Lanka, tourism accounts for approximately 12% of forex reserves. In a domino effect, the island nation defaulted on its international debt, and as essential commodities became unavailable, massive protests erupted against the Rajapakse government, forcing the Prime Minister to resign in May this year. In August 2021, Afghanistan saw a regime change. The preceding and ensuing conflict has caused nearly 1 million people to leave their homes. According to the UN, a total of 6 million Afghans now reside as refugees. 80% of those forcibly displaced within Afghanistan are women and children. And as with previous waves, the poorest and the largest segments of the displaced have crossed into neighboring Iran and Pakistan. Pakistan itself, already in a severe balance of payments crisis, in July this year started counting its losses from a monster monsoon caused by rising global temperatures and unprecedented rainfall. Immediate losses are estimated at more than $20 billion. But the reverberations are expected to extend into 2023, as many of the 33 million displaced people are unable to return home. With their villages and fields still inundated, farmers are unlikely to sow the winter crop, raising very serious concerns on food security. It is also very important to mention here the chronic gender inequality in South Asia. According to the World Economic Forum's latest Gender Index report, it will take South Asia's women 2 centuries to catch up with their male counterparts. And it is also worth noting that a narrowing gender gap in account ownership is not automatically translating into effective utilization of those accounts. But despite all its challenges, South Asia also offers a compelling opportunity. Because across South Asia, technology is transforming numerous sectors, including retail, health, transport, education, and agriculture, to name a few. Technology is enabling new players to enter the market, creating competition, and developing more customer-centric financial and non-financial services. The transformation is drawing significant interest from local and foreign VC firms. Pakistan saw more VC investment in 2021 than the previous 5 years combined. South Asia is also seeing a rapidly evolving regulatory environment. Just this month, the Reserve Bank of India announced plans to pilot a digital rupee. Similarly, the State Bank of Pakistan's licensing framework for digital banks has drawn considerable interest, as 20 applicants have applied for a total of 5 licenses. And last but not least, South Asia's societies are also transforming as education and access to technology is becoming more ubiquitous. Not only does the growing middle class have more buying power, technology is also altering the dynamic between the citizen and the state. We're witnessing an example of this on the streets of Iran and to some extent, even conflict-ridden Afghanistan. So while we're seeing heightened socioeconomic stresses, we are also hearing louder voices for peace and progress and seeing many more women leaning in. Overall, we see opportunity to enable transformative progress in South Asia. But to do so, South Asia must overcome 3 challenges. It's gender inequality, the limited access to energy and internet, especially in rural areas, and we must enable the utilization of financial services by providing more customer assistance and education. So Evelyn, back to you.
Thank you, Meher. This has been a great, very quick roundup. I mean, considering everything that's happening in South Asia, the floods, gender inequality, but then, you know, you've given us some hope in terms of education, technology, and investment, and the positive movements in the regulatory space. So thank you for that. The situation in Europe and Central Asia is quite different, as we'll hear from Nelly Esipova. Nelly's the founder of Multicultural Insights, a research firm that has been deeply focused on the current situation in the ECA region. Nelly, welcome to Financial Inclusion Week. Thank you.
Thank you, Evelyn. Good morning, good afternoon, good evening. ECA is a unique region where access to financial services is not the biggest challenge. It is more about financial health of people and access to quality services. It's about problems with fraud and cyber risks. This year, ECA region is suffering from other challenges. Most notable is the war. The Russian war of Ukraine, invasion of Ukraine triggered one of the largest humanitarian crises in Europe since World War II. Over 7 million Ukrainians fled to neighboring countries. Over 6 million more have been displaced within the country. For a country of 43 million people, it means that every 3rd person from Ukraine is on the move right now. A smaller but significant number of Russian citizens have fled Russia since the beginning of the war. Let's first talk about hardship of people who did not leave Ukraine. 60% of those employed before the war are now unemployed. Many Ukrainians have used up all their life savings by now. Every 9th adult has their home damaged because of attacks and will need money and materials for repair. We cannot underestimate the importance of continued access of Ukrainians to financial institutions, loans, and humanitarian assistance. For the millions of Ukrainian women, children, and elderly that fled to neighboring countries, they arrived bearing foreign IDs, and many did not speak the local language, placing large strains on the process of resettlement, getting access to housing, financial services, healthcare, and employment. And the demand for assistance was significant. For example, over 100,000 Ukrainian refugees entered Estonia, a country with a population of 1.3 million people, resulting in nearly 8% population increase in a very short period of time. Financial institutions in some host countries did not have the infrastructure or resources to accommodate the influx of such customers. Many systems were put in place rapidly. For example, the EU Temporary Protection Directive granted residency rights to refugees from Ukraine and offered access to basic products and services, some with digital interfaces and material in Ukrainian. Since many refugees fled without documentation, a new solution called Digital Data Corridors was created. It allows financial institutions to work electronically across borders and receive international credit histories and identity certifications. The system is operational already in Poland, Georgia, Latvia, and Czech Republic. Now a few words about people who had to flee Russia. Recently, former Soviet Union republics like Kazakhstan, Kyrgyzstan, Georgia, Armenia have received a large new influx of Russian citizens, mostly men. Just within the first 10 days after mobilization announcement, over 200,000 Russians entered Kazakhstan alone. More than half of these people have already received personal ID numbers that allow them to set up bank accounts and work in Kazakhstan. The relocation of Russians are having an impact on host countries. People are moving their savings and businesses with them, taking advantage of special economic zones created to capture digital nomads. For the first time since the collapse of the Soviet Union, Central Asian countries are experiencing brain gain, not brain drain. On the negative side, the Russian influx has driven in Central Asian capital cities rent prices up 300 to 400%, and has enabled landlords to drive out local renters in favor of Russians who will pay much higher rent. Fear is growing amongst locals that Russians will price them out of their own neighborhoods, take their homes, jobs, and food. So social tension is growing and will need to be monitored. Without a doubt, compounding effect of this war on the entire world is enormous. Rising economic energy costs are consuming household budgets, affecting financial lives of people around the world. Recently, I talked to a woman in Romania who said that her energy bill in August quadrupled in comparison with last year. The impact of the war on food supply will reverberate for years to come, especially for Africa. And the next year might be even worse for many countries, since farmers in part of Ukraine were prevented from planting crops. But despite the tragedy and challenges created by the war, the response is a testament of an incredible effort. Humanitarian aid is coming not only from international organizations, but from regular people across the world who send money and goods to Ukraine. And supporting all of this are innovative financial solutions from fintechs to banks, providing services to people in need. Thank you.
Thank you very much, Nelly. My computer's slowing down today. Here in Virginia, we have slow internet apparently. Thank you for the insights. This is clearly a testimony to resilience in very difficult times. And also, I'm really so caught up by the interconnectedness that you're bringing up, not just in neighboring countries, but as I recall from a prior conversation with you, Nelly, that less than a month after the war began, prices of wheat flour increased by 25% in Cameroon, which caused bakers to go on strike in Cameroon. But let's hear more about Sub-Saharan Africa from Christabel Makoha. She's currently the Senior Director of Innovation at CARE based in Nairobi. And she's going to give us an overview of what's happening in Sub-Saharan Africa. Welcome, Christabel, to Financial Inclusion Week.
Thanks, Evelyn. Good morning, good afternoon, and good evening, everyone. It's a privilege to be here with you all reporting from sub-Saharan Africa. It's impossible to talk about financial inclusion in Africa without pointing out all the ways in which we're leapfrogging developments in the financial sector, and in a lot of unexpected ways, taking advantage of emerging technologies to drive financial inclusion in the continent. To begin with, in the last decade alone, we've seen an increase in account ownership in sub-Saharan Africa, primarily driven by the uptake of digital financial services. In fact, account ownership has increased at a rate of 140% across the region, from 23% to about 55% in 2021. We're also seeing a growth in the range of second-generation DFS products offered in the market. This basically means beyond basic transactions, savings, and borrowing, more people are accessing financial products that help them cope with economic shocks and emergencies, such as insurance, as well as using e-commerce platforms to access and pay for products and services. We're seeing a growth in that area as well. Beyond technology, social groups such as village savings and loans associations and ROSCAs continue to play a key role in driving financial inclusion and resilience amongst women. Organizations like Care International, for example, have organized over 12 million women in groups across 45 countries. There really is no limit to the potential that social groups hold in building financial reserves for women. Lastly, it's interesting to see the continent's openness to emerging technologies. Who would ever have thought that Nigeria would be a global leader in Bitcoin trade? Estimates currently show that of the top 10 countries for trading volumes, Nigeria ranked third place after the US and Russia in 2020, generating more than 400 million worth of transactions. The continued devaluation of the Naira is definitely a big driving force for this, amongst others. Of course, the jury is still out on the regulatory, financial, and technical risks of cryptocurrencies, but it is interesting to consider the fast rate of adoption and how innovation preceded regulations around crypto, similar to how regulations lagged behind mobile money when first introduced to the market. As we celebrate some of these gains, I'd like us to take a moment to observe a couple of concerns arising from the surge in use of digital financial services. First and foremost, over-indebtedness is a major problem. Financial sector deepening Kenya, together with the Central Bank of Kenya, SIGA, and the Kenya National Bureau of Statistics, conducted a representative survey that showed that more than 1 in 4 Kenyans has taken a digital loan. However, many of these digital borrowers struggle to repay on time, and there are growing concerns about the risk of excessive borrowing and over-indebtedness, particularly for lower income households. Secondly, consumer protection issues and data privacy remain a concern. There's still a lack of robust legal and regulatory frameworks that govern digital lending in most countries in sub-Saharan Africa. However, we are seeing a bit of progress, and in a few countries like Kenya, they've enacted the first Data Protection Act as recently as 2019, and we expect and hope to see more consumer protection frameworks enacted and implemented. When we consider other aspects like the gender digital divide, while the COVID-19 pandemic definitely accelerates digital inclusion, as Mayada was mentioning in her introductory speech, there are concerns that we will not be able to maintain these gains because of inequitable access to technology, which remains a significant challenge. In addition, Meher from Pakistan mentioned internet access isn't everywhere. And so as we're designing solutions and digital apps, it is important to remember that the consumers we're designing for, one, don't always have access to affordable and stable internet. And even when they do, something as mundane as not having enough memory space to download an app can actually prohibit them from using these applications, although well-intentioned. In wrapping up this brief, I'd like to highlight a couple of opportunities for service providers and the development community in general to consider. Number one, most financial service providers on the continent do not have a clearly defined strategy for reaching the next generation of clients. Because of a lack of data, it is often assumed that young people who make up more than 40% of the population on the continent are not good clients because they lack collateral or are simply not responsible borrowers. On the contrary, research shows that there is an increasing interest and ability amongst youth to save, invest, and grow their wealth. As such, there's an opportunity here to design financial solutions that are tailored to their needs and their behaviors. Secondly, there's a steady growth of venture funding flow to African startups. The African Venture Capital and Private Equity Association estimates that this year alone, total venture capital investment into African startups will hit $7 billion. Of course, there's ongoing discourse regarding who actually receives this kind of funding, and that despite the growth in funding flows, this is still representing only about 1% of global VC funding flowing to a continent that is touted as the next frontier. However, this is still progress and an opportunity that we can leverage to continue advancing financial inclusion in order to create pathways for low-income populations to build their wealth. With those few remarks, I'll hand over to you, Evelyn.
Thank you very much, Christabel. You gave us a lot to think about, and you also reminded me about Inclusive FinTech 50. Just this morning, we announced the winners of Inclusive FinTech 50, and of course, many of them are in Sub-Saharan Africa. You also reminded us, as did Maher, that these tech solutions, while they have such great promise, still suffer from internet, memory, data, and while we're very excited about platforms, and you're going to hear a lot about platforms and embedded finance, I think your point on over-indebtedness, as well as the importance of that high-touch social cohesion in groups, was very well taken. So thank you very much for that. I would like to invite Sahar TV. She's the financial sector advisor to the FinDev Arabic platform and to Sanabo, and she's very well placed to give us an update on Middle East and North Africa. Welcome to Financial Inclusion Week, Sahar.
Thank you, Evelyn, and thank you for having us to kick off this wonderful week. So first of all, good afternoon from sunny Cairo, and would like to start on that positive. My name is Sahar, and I will share with you a few headlines from my region of the Middle East and North Africa. A few facts to start with. The region is really comprised of 3 sub-regions: North Africa, Gulf states, Arabian Peninsula, and the Middle East, with a total of 22 countries within our region, and a total population of over 440 million people, whereas 60% of our population has not yet reached 30 years of age. So we're a young, youthful group of people. So other than the sunny weather, let me start with some areas of concern that are on our minds in my region these days. First, at the macro level, the general political economic decline in some of our countries, such as Lebanon, Yemen, and the ongoing concerns in Syria. Lebanon, with the hyperinflation leading to closures of microfinance institutions and almost wiping out the portfolios of the remaining institutions that have been there serving that community for over 25 years. General unrest in other countries such as Yemen and Syria are limiting, in general, the ability to plan for the future, and instead, the main concern is how to survive. Overall situation in several other countries in the region are causing increased levels of displaced people internally, with higher levels of migration in the region and at times internationally. The currency in several countries in the region are also there's issues of uncertainty and concerns, causing concerns for all financial markets, which also impact our financial institutions. The other point is youth, and of course with youth comes the issue of unemployment in our region. 1 in 5 youth are unemployed. Women unemployment is over double that of men, and the public sector obviously is not able to create enough jobs to meet the demand, whereas on the other side, the private sector is not able to find the talent and skills required, which means we have another concern, which is the education mismatch with the market requirements and needs, especially in the ICT space. With talking to you from Egypt, of course, we can't overlook the climate and the lead up to the COP27, which will be hosted by Egypt next month. In line with other global concerns and conflicts affecting the world, the region is also affected by its limited preparedness to climate shocks, disruption to supply chains, and the direct impact on the most vulnerable in terms of their food security and basic shelter, again, leading to migration internally and internationally, internally in the region and internationally to the rest of the world. However, on a positive note, there has been some developments in the region. And again, the region, to keep in mind, is divided into 3 sub-regions with different characteristics. While account ownership has globally increased over the last 10 years from 55 to 76% of adults, in MENA, account ownership also increased more modestly from 38% to 53%. The gender gap in MENA region remains to be there at 14%, 60% men, 46% women. So the gender gap is still present, but shrinking, especially in countries such as Egypt, as per the latest Findex data in 2021. At the digital adoption level, we were a bit slower, of course, than Africa and the rest of the regions, but percentages of adults who made or received digital payments in MENA increased in the last 5 years from 38% to 46%, which is relatively a good trend. The percentage of adults who saved also increased from 33% to 39%. While the discussion of digital transformation was always on the tables and on the minds of everyone over the last decade in the region, the disruption caused by the pandemic since 2020 seemed to have a positive impact on the stakeholders in the financial inclusion space to speed up their plans and move towards implementation of their digital transformation strategies, even if it was in a hybrid model. A positive example comes actually from Yemen, a country in conflict for over 8 years, and where one microfinance bank was able to increase their outreach to serve over 1 million clients with both credit and saving services through various digital platforms. One of the leaders in digital economy these days is Egypt, which represents 25% of the total population of the MENA region, and focuses on a strategic framework to support the now over 112 fintechs in the country, which is having a positive effect on the rise in entrepreneurship nationally, as well as the parallel fintech investments in the country. Egypt's fintech strategy framework is rooted in the National Vision 2030 agenda and built on CBE, Central Bank of Egypt's vision, which encompasses the aspiration of market participants and aims at addressing the unmet needs in today's financial solutions by aligning new technical solutions with regulation frameworks, access to funding, of course, and market good governance. Finally, another positive point that has been in our region is the progress at the policy and regulatory level, which was one of the main challenges over the last decade. Today, 10 out of our 22 countries have regulation in place for the microfinance sector, covering Morocco, Tunis, Sudan, Egypt, Jordan, Lebanon, Yemen, Syria, Palestine, and in Iraq, specifically for MSME finance companies. Some have moved further in terms of revising the original regulations to further develop the sector and open the doors to a more diversified group of financial service providers with the goal of ensuring progress towards growth and higher levels of economic and financial inclusion in the countries, allowing for profit, for non-profit, and of course the fintechs. Examples include sandboxes that are hosted in central banks in Egypt and Jordan, for example, and interoperable systems that were developed and in existence in Jordan, such as Jomo Pay, which facilitated the uptake in the digital movement after the pandemic hit the globe in 2020. To wrap up the regional report from the Middle East and Africa, North Africa, and while we acknowledge the many challenges that remain, we see positive signs that could pave the way for a more social, economic, and financially inclusive societies where regional vision could lead to what we're working on, which is collective impact that we aspire to achieve. Thank you very much, and back to you, Evelyn.
Thank you, Sahar. We gave you a pretty impossible task to cover 22 countries but you did it. So I'm also thinking about the word cloud that Mayada mentioned earlier. If you look into the live discussion box on the bottom right of your video, you should be able to see the word cloud link. And we'd love to hear what you're thinking. I know that my mind has been stimulated with about 50 words that I could put into the word cloud. But if you want to limit yourself to one or two, that would be great. Just the amount of innovation and regulation that Sahar brought up, the transformation and the youth situation in Middle East, North Africa, all led to some exciting and interesting thoughts that you'll be hearing a lot more of throughout the week as you listen to different sessions. I want to ask Pablo Arbete from Latin America to please join us. He is an international expert in payments and financial markets, and he's going to talk about what he's seeing in LATAM. Thanks. Welcome, Pablo, to Financial Inclusion Week.
Hi there, Evelyn and the team there. Thank you very much. I've been tasked with presenting a summary of 4 minutes of Latin America. That's a daunting task, and I wanted to commend my fellow panelists, which have done a great job, and I'll try to be up to par with that. So in 4 minutes, I think I would just address three big topics in the region. Which have to do with the resilience that was mentioning Mayada before, and the impact of the pandemic and all the things happening with a domino effect after that in the world, which is no different in the region, but also how that has had a specific impact in Latin America, which has a positive side. I'll tell you about that in a moment, and also how the public sector and the private sector are dealing with all this. So first of all, I think that the impact that we are seeing all over the world with the pandemic first, then the war in Ukraine, high inflation, slower growth has had is the same thing, same general landscape in Latin America. But I would say that the main difference here is that it has had a positive effect in terms of financial inclusion. Having produced somewhat of a forced march towards financial inclusion in terms of mostly increasing the access to financial services. So when we look at the FINDEX numbers that were mentioned before, and it's very handy to have them have this data taken just after or during the end of the pandemic, we see that the region has had its largest increase in terms of financial inclusion in its history, or since FINDEX is taking these surveys, reaching 73% of inclusion, up from around 50% as a regional average, with the best examples being we have the Brazil, Venezuela, Argentina, which are close or above 80% of financial inclusion, and then we have probably Central America and the Caribbean in some examples with the least financial inclusion, around 30%, 35%. So of course, there's a lot of variability here, but I would say the overall picture is increased financial inclusion. And here I would like to address two elements that I believe are contributing to this increase in financial inclusion in a very dire context. Now, I want to stress that in terms of slower growth, deep issues in the economic fabric. Of course, this has an impact in every aspect, but I wanted to focus on this positive side without leaving aside, of course, the other elements. So I would say that this forced march, as I was saying before, towards financial inclusion, in terms of the public sector, has been driven mostly by G2P payments. As you know very well, the pandemic has demanded a lot of support from the governments around the world. And what has happened in Latin America is that the infrastructure, by slowly advancing in the last decade, it was very much mature in many aspects. So this meant that these G2P programs could be really boosted, and they could really, they were available and ready to go larger. So this meant that in some cases, in the case of Argentina, for example, more than 5 million new recipients of these programs in a country of around 45% million inhabitants, these were significant increases in terms of the ability of these programs to deliver financial inclusion through these G2P payments. So I would say this is a significant development in the region, specific to the region. Of course, G2P programs are everywhere, but I would say in the scale and the increase that they had during the pandemic, I think they are really interesting, and they could be studied further. No, I think we don't have the complete picture yet of how all this evolved during the pandemic. And on the other side, payment systems from the public sector have been a huge success. And there I wanted to single out the case of Brazil, which this is an interesting story. Some of you probably heard it, some you probably haven't. But when the pandemic started in Brazil, instant payments were nowhere to be seen. They were not yet operational like they were already in India, for example, with UPI. In November of 2020, it was the middle of the pandemic, as you know, PIX, this instant Brazilian payment system, was launched. It's run by the central bank, so it's a public utility approach. And in November of 2020, there were 0 fast payments in Brazil. We fast forward 2 years, and now we have 2 billion payments per month, which is, of course, a very sizable number, but also driven by the availability of this infrastructure right in the middle of the pandemic. And of course, these payment systems are really low cost, are cheap, typically much cheaper than the card ecosystem around the world, and they have had a huge adoption. So it's a really interesting case of a public sector approach to payment that has paid off handsomely in the pandemic. And last but not least, on the private sector side, on the fintech side, there's a lot of talk about how fintech in the region have been able to also boost these financial inclusion figures. And here I would say the evidence is not that straightforward in terms of there's a lot of anecdotal evidence of lending providers, some crypto providers in some places, providers of payments accounts or simplified accounts or wallets in all over the region, Brazil, Mexico, Central America. I would say they are everywhere. But here, so far, we have not had the data in terms of the contribution of these fintech initiatives to financial inclusion. There's a lot of spare evidence that this could be the case, but there still needs to be a bit more research to see how this unfolds and what's the real evidence out there. And of course, as it was mentioned before, I think it's a very important element that we talk about fintech, lending, crypto, all these very flashy words. Also, usually the old problems of over-indebtedness and the typical financial inclusion problems are there. So just to round up, I mean, it's been a very interesting development in terms of a dire scenario with a boost on financial inclusion. This should contribute to the resilience of the region, but we still need to do a lot more research to understand really which are the impacts of this for the longer term. So I think that would be more or less it from my side, Evelyn, and happy to keep the conversation going. Thank you very much.
Thank you very much, Pablo. This has been great, and you know, listening to the Brazil payments story is really fascinating. Something else that you said really struck a chord with me as well, that we have anecdotal evidence that things are working. But it really strikes the need for why we are holding an event like Financial Inclusion Week, to go beyond anecdotes, to listen to over 120 different panels and sessions where people are talking about research and real data and really searching for the evidence that what will move and improve not just financial inclusion, but that next level of financial well-being and impact. So thank you for reminding all of us of the importance of this. And I do want to thank all of the people who are attending. There's people from around the world, as you can see in the comments. And I want to thank especially all of our reporters. We asked you to do a very impossible task. You covered very large regions of the world in 5 minutes or less. And I want to thank you for doing that. The recurrent themes that we heard from all of you could about the difficult ones: climate crisis, politics and war, gender gaps. And then we also heard some really positive things from all of you. Thanks for that. Resilience, payments, fintech, just opportunities that we've seen coming out from every single region of the world. So I'm going to pass this on to Mayada to give us a closing and kick off the rest of this week. Thanks, Mayada.
Thank you, Evelyn, and a huge thanks to Maher, Nelly, Cristobal, Sahar, and Pablo. I don't know where else that you can get within 30 minutes a vast overview of what's happening around the world at your fingertips. So huge thanks to all of you for volunteering your time, for synthesizing your messages, and just making it so accessible to all of us here at Financial Inclusion Week. We asked you at the beginning to put down your thoughts on what's on your mind, the audience, and I've been receiving some of these. What I see is climate change is a huge topic that's on people's minds. Inflation, digital literacy, the community, digital finance, financial health. We're now sharing it live so you can see also yourselves what your colleagues and others have been saying. So obviously we have a massive agenda this week, the largest we've ever had. So we will touch on every one of these topics in the various sessions. So moving on to the agenda, let me just give you a high-level overview. We have had really a tremendous, overwhelming response, people submitting sessions to this year's event, more than we've ever seen. This is a real testament to the fact that there is interest to learn from each other, for all of us to learn from peers and to share knowledge from around the world. I think from the things we just heard this morning, you already see the value of where, I call it the butterfly effect, where one thing happens in one region and the trickle down in another, and how we can hopefully leapfrog by learning from each other. We have 70 on-demand sessions. So please spend some time looking at the platform, and when you have some free time, visit the on-demand sessions. We have some great content in there. These are pre-recorded sessions that you can really watch anytime that you have available. They're available all week. They'll be available for almost a year after. So whenever you have a moment, check them out. In terms of the live content, we have 11 regional plenaries that are at different times throughout the world. We're really running this year on a 24/7 schedule. So there'll be content specific to your region, often in your language. So check those out as well. Each day we've introduced something new this year. We're introducing a keynote, a short talk from different organizations to tell us a few things that they're thinking about. Today, we are starting with Sophie Certain, the new CEO from CCAP. We're very excited to learn more about what she's envisioning for the next phase of CCAP. Tomorrow, we have Songbei Lee from USAID. Wednesday, we have CFI's own Eduardo Totolo. And then Thursday, we have a view from the US with Luz Oricia from Action Opportunity Fund. So in addition to the keynotes, we also have 16 global plenaries and 18 parallel live sessions taking place in the hour just before and after the global plenaries. Again, there's a lot to choose from. Don't worry if you can't see them all this week. We're going to make all the recordings available after the event. So I think we can agree that the world is moving at a dizzying pace these days. I'm really looking forward to taking the time to connect with the content and other participants and to learn from all of you. I know we had a little bit of extra time and we were thinking of taking questions. So I don't know if people have some questions that have been popping up. If my colleagues can stay on, and I'm not seeing any questions coming in. Evelyn, do you want to join me? I don't know if you have any questions or if you've seen any questions.
I have not seen any questions yet. I am consistently embarrassed about my slow internet though. And I really do just want to thank all of the participants. I think the interconnectedness that we heard throughout was such a fascinating topic, and one that I know that we're going to see continue throughout the entire week. I like your example of the butterfly effect. I think that fits it perfectly.
Thanks, Evelyn. There's, the platform, there's lots of opportunities to connect. If you think of your question, which is usually what happens to me, I think about it right after the event. If you think of your question right after and you want to reach out to one of our panelists, please do reach out to them. You can do that. Hopefully we can use the networking function this year a little bit more than we've done in the past. Reach out to me if you have any questions related to the content, or if you have any questions related to the work at CFI. I just want to, again, thank Evelyn, thank our incredible reporters from around the world for everything. Yeah, please give them a hand for their work. And I just want to welcome everyone to Financial Inclusion Week 2022. We will sign off here, but I hope to see you at the next session. Thank you, everybody.